welcome. You're catching this live from SBI Live Studios. I'm Neetish Sarda and with me is Kavita. And yes, of course, we are in the thick of the earnings and that's sort of a reaction we are getting to see on the markets as well. Because of the weak global handover, it's the Indian markets that are a bit in pressure. But we have seen a decent recovery from the day's lowest point. Some of these sectors are definitely holding up, be it select metal counters, be it select pharma names as well. But let's put the spotlight on some of the earning candidates then. And Smartworks did come out with its earnings. Let's try to understand the outlook going ahead with Mr. Neetish Sarda, who is the MD and founder of Smartworks, joining us on the show. Neetish, hi, morning. Good to be speaking with you. And firstly, let's touch on your margins then, because your EBITDA margins did expand to 63.6%, I believe, versus 61% last year. What operational efficiencies or cost levers contributed the most to this improvement?
Smartworks has increased its revenue significantly. If you look at our revenue this quarter, it stands at 425, almost 425 crores, a jump from 350 crores year on year, which is a 21% jump from the last quarter, from the last year's same quarter. Our revenues quarter on quarter have grown by 12% from 380 crores, almost 379 crores to 425 crores. So the revenue growth is significantly contributing towards the increase in EBITDA and the utilization levels, which have also.
Despite the loss narrowing to 3.1 crores from 15.8 crores last year, when do you anticipate Smartworks turning profitable at the net level?
So if you look at our trajectory, we've continuously been working towards reducing our losses. Smartworks is a high growth company. We've added more than 3 million square foot just in the last 1 year. We stood at about 8.3 million square foot of total space in the same period last year. Today, we stand at about 12.7 million square foot of space, despite adding a significant new inventory into our ecosystem. We're still on that trajectory of going towards profitability. Our losses have narrowed from 15 crores to almost 3 crores this quarter. And if you look at that trajectory, you're seeing that these numbers are getting narrower and narrower every quarter.
All right, but now you also manage 12.7 million square feet across 14 cities, with 9.1 million being operational. What's the targeted operational footprint by the end of FY26?
We've already seen our scale increase from 8.3 million square foot to 12.7 million square foot of space. From the same quarter last year, in Q2 of FY25, we were closer to about 8.3 million. Now we're at 12.7 million square foot of signed up space. So we're definitely seeing a lot of demand. We've blocked in a significant amount of supply. It's only been about 4 months since the company has listed. Within that 4 months, we've gone ahead and signed up a lot of more properties. Despite all of that, if you look at our occupancy, which is our occupancy for our mature centers, the committed occupancy stands at above 88%, which is at a very, very healthy level. So we're seeing both significant amount of supply sign up, which has already been done, and a significant amount of demand coming for the product. If you look at Flex, generally the industry is growing significantly, but Smartworks is a pioneer and is growing faster than anyone else in the industry. Our ability to take up these large campuses and transform them into work hubs for 10,000 people to come on a day-to-day basis is something that sets us apart. And we continue to go down that route.
When we look at Mumbai and Bengaluru, these cities have shown strong addition this quarter. Which regions or cities are expected to drive the next phase of growth according to your plan now? And also, what would be the timelines for it?
We are looking at growing pan-India. There is not a particular region which is we are looking at growing. We are tracking a significant amount of properties across the country. We are seeing which are the properties that can be converted into these large campuses that can cater to the client expectations that Smartworks tenants have now. So we're working towards growing in every region. This quarter might have seen some growth coming from Bangalore and Mumbai, but you will see growth coming from almost every region of the country in the coming quarter. So we're going to distribute that growth. Our dependency on one particular region is continuously going down.
All right, but Neetish, what's the planned CAPEX spent over the next 12 to 18 months, and how will it be financed while maintaining profitability?
So the client, we are expanding by at almost 2.5, 3 million square foot every year. If you look at the total capex outlay, it comes to close to about 300 to 350 to 390 crores of capex spend every year. A significant portion of that is coming from the cash flows that the company is generated. The company is in a position in which it's generating a significant amount of operating cash flows on a quarter to quarter basis. So we're redeploying all of that towards growth. Also, in our IPO, we raised a certain amount towards growing towards the expansion of the company. We're also going to be utilizing that. But the company is on track to become free cash flow positive as well, considering even despite the large expansion plans.
Right, let's talk about the GCCs. They now contribute almost 15% of rental revenue. How do you plan to deepen penetration in this segment given India's growing GCC ecosystem now?
We're seeing a significant amount of requirement and demand coming from the GCC world. Recently, Smartworks launched Smart Vantage, which is our platform in which we are trying to cater to the large GCCs now entering into India. We've seen a significant adoption of GCCs, as you said, from almost 5%, it's increased to 15%. And this is with Smartworks growing across all parts of the country. So you're seeing GCCs having more and more presence in the ecosystem. With Smart Vantage, we are more confident that it's just been about a month since we've launched the product. But with the Smart Vantage product, which is catering to the required needs of GCCs, we're already seeing a significant amount of demand coming in. We've blocked in the right supply, we've blocked in the right partners to come and partner with us on the Smart Vantage platform. So I think giving that holistic offer will significantly increase the demand coming in from GCCs. And over the next few quarters, you'll see this, impacting the numbers and this 15% becoming a meaningfully larger number.
All right, Neetish, with this